This is your LMAX exchange technical update for Monday, February 27th, 2017. Euro dollar. So the euro trades around this critical inflection point in the 105s right now, waiting to see what that next move is going to be. Are we going to see a bearish continuation down below 105 and towards the 14-year low at 103.41, which guards against parity, or is the market going to base out around 105 in favor of fresh upside beyond recent highs at 106.80 and back towards and through that critical resistance, that peak that we saw back in December of 2016 at 108.75. The difference again is a bearish continuation to the downside or an inverse head and shoulders formation on the daily chart, which projects significant upside. Here's that left shoulder going back to the fall of 2016, and then we established the head back into January of 2017. Before finally coming up and now trading down to which could be a right shoulder of an inverse head and shoulders formation. Again, right now we lack clarity, but a pushback above 106.80, last week's high, would do a good, the high that we saw going back to the previous, the 16th of February, would do a good job of strengthening that inverse head and shoulders formation and reinforcing a more bullish outlook. Again, a daily close below 105 will negate that and open the door for fresh downside. Sterling dollar. So cable continues to be pressured overall to the downside. The market had recently stalled out ahead of 127.75, that December peak, and this puts the pressure or keeps the pressure on the downside. A break, of course, back below recent lows at 23.47 will strengthen this outlook and accelerate declines. Dollar yen. So dollar yen continues to be very well capped into rallies, with the market now positioned for a break below recent range support at 111.59, exposing fresh downside towards a measured move objective in the 109.50 area. At this point, we do need to see a break back above 115.62 to compromise or take the immediate pressure off the downside. Euro Swiss. Euro Swiss continues to consolidate just off the 2016 low at 106.24, but given the recent price action, which is classified as a bearish consolidation, the risk is for a fresh downside below 106.24 and towards the 105 psychological barrier further down. Aussie dollar. So Aussie is stalled out in 2017 after a very impressive run. The market is stalling out by some critical medium-term resistance up towards 78, but a break back below 76 will be required to strengthen what could be a bearish outlook and accelerate declines. Dollar CAD. So dollar CAD setbacks have been very well supported in the 130 area. Overall, this broader trend continues to be quite constructive, but we'll need to see a break back above recent highs right now, which come in around 132.10 to strengthen the bullish outlook and accelerate gains. Only back below 29.69 would compromise this more constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues to show signs of topping out. The market has recently bounced out from support that was seen in the 71s, but overall any rally should be very well capped in favor of a lower top below 73.76, the 2017 peak, and fresh downside back towards the 68 to 69 area further down. SPX 500. Each day the S&P 500 feels like it's making another record high, and we've seen that yet again into early Monday, with the market breaking up towards and getting closer towards psychological barriers at 2400. At this point, we need to see a close back below 2350 at a minimum to take the immediate pressure off the downside, off the top side. Gold. So gold has rallied into some significant resistance at 1260, but this latest break to 1260 and push above recent highs that we had seen up in the 1245 area now opens the door for a fresh measured move upside extension towards 1300 further up. Look for any setbacks to be very well supported, ideally ahead of 1216, with only a break back below 1180 to compromise the constructive outlook for gold.